Wall Street closes with losses as inflation remains persistent in September. CPI inflation rises 0.4% on the month, ahead of estimates of a 0.3% increase. Bond yields also rise as stocks come under pressure. Stocks in the Asia-Pacific opened lower after higher-than-expected inflation figures in the US. CPI inflation in China remains flat, although the producer price index falls more than estimated. The GIFT Nifty is also indicating a lower start for the Indian market. Crude prices reverse early gains. Brent hovers around the $86 a barrel mark as a sharp increase in US inventories offsets expectations of tight supply. Inflation in India in September eases to 5%. Food inflation cools to 6.5% as vegetable prices see a sharp drop. Industrial output picks up pace with over 10% growth in August, beating estimates, but the double-digit growth is largely due to a base effect. Infosys beats estimates in the second quarter with a revenue growth of more than 2%. Company lowers the top end of its full-year revenue growth outlook from 3.5% to 2.5%. HCL Tech revenue growth marginally misses estimates. Company lowers guidance even as margins beat estimates. Good morning in the Mumbai News Center. I'm Sonal Bhutra. You're watching Power Breakfast. Those are the top headlines, and it's all about inflation numbers that we've been getting in the US markets, in China, and in our own country as well. But before we discuss that in greater detail, let's take a look at what's happening in the Asian markets. Well, it's been a weak handover from Wall Street, and that's something that we can see in the Asian indices as well. The Hang Seng market, that's down 1.4%. Taiwanese index is down 0.3%, and it's because of the stubborn inflation in the US market. We also have something like a Shanghai, which is sitting with cuts of 0.5%. There has been some macroeconomic data in China as well. And we have Straits Times as well, sitting with cuts of around 0.7%. Nikkei is the one which is outperforming with cuts of just 0.2%. So definitely looking like a red screen. And if we look at the GIFT Nifty, because that is the one which will indicate the open for our own markets, the implied open is suggesting that the start for our own markets could be deep in the red, actually, 153 points lower after that cut of 17 points in our trading session yesterday. Moving on now and focusing on the big macro cue from the United States. Last month, consumer prices rose 0.4% on the month and 3.7% from a year ago, a tad higher than street expectations. CNBC's Steve Leisman breaks down the details of the September CPI report. Steve.
The headline CPI coming in at 0.4. It's down from the 0.6 last month, but it had been expected at 0.3. And the year-over-year 3.7 unchanged. There was hope for improvement there. The core coming in exactly as expected, up 0.3, same as last month. And the year-over-year making some progress that might be keeping people at bay, or at least putting two sides to the trade here. Gas prices went up a healthy 2.1%, and home ownership costs rose an unexpected 0.6. Most forecasts were hoping for some progress in that number. They do see it coming down in the months ahead. But there were declines in used car prices and apparel, while food inflation, it was modest this month, at least this month anyway. All of that leading to a higher probability of a Fed rate hike, but not overwhelmingly so. I was kind of surprised. It was down very low, below 10% probability for November. Now it's up to 12, and December's 36, up from 28. When it starts to get near 50, the market really means business. Officials have talked a lot in recent days of letting the higher bond market yields do the Fed's work for it, and yields are higher. So the Fed, at this point, is thought to have pivoted to hold, but it's going to keep a wary eye on inflation data. And as you know, guys, the question now increasingly is how long at these levels, not necessarily how high anymore.
Okay, all right. That's the take on the inflation print, but it's time to listen into what Aditya Bhave, senior U.S. economist at Bank of America, makes of the CPI print and what it means for the Fed's policy.
Our takeaway from the CPI report was, one, it's a reminder that the path back to 2% is going to be a difficult one. And two, sticky services inflation means sticky policy rates. So we keep our forecast for one more hike. Don't have particularly strong conviction on whether that hike comes in November or December or possibly even later. But even if that hike doesn't get delivered, higher for longer. So it's going to be difficult for the Fed to cut rates.
Okay, it could be difficult for Fed to cut rates. That's the word coming in from experts. But reacting to the inflation numbers, Treasury yields, the US 10-year and 2-year jumped, pressuring equities. Wall Street ended the session lower, snapping a 3-day winning streak with the Dow Jones down over 170 points, the S&P losing 27, and the Nasdaq Composite closing with an 85-point cut. Okay, that's the global market action. As I said, it's a lot about the inflation numbers that we've gotten globally, but how will these overnight cues impact our own markets? We have big earnings to track as well. We have our research team joining in with just that. What's the trade setup looking like? The stocks that will be in the news and the action from the F&O space as well. Hey guys, very good morning to all of you. It's a Friday, so happy Friday as well. Reema, let me come to you first up. Busy evening for you yesterday, but a busier morning as well. A lot of cues to track.
Indeed, and starting with the fact that GIFT Nifty is currently suggesting a start sharply lower, 150 points down on the GIFT Nifty. Two reasons. One, US markets, you pointed out that 0.5% knock on the benchmark indices there, following the hotter than expected CPI inflation print, the rise in the US 10-year yield to levels of 4.68. So that's one. But the second is the IT stocks. So post-market hours yesterday, you had numbers coming in from Infosys and HCL Tech, and both of them have disappointed the street largely. So ADR, that's a way to track perhaps what IT stocks may do today, and that's the performance. Infosys ADR down 6.5% after the surprise guidance cut for FY24, and they're now expecting revenue growth this year to be a paltry 1 to 2.5%. So low single-digit growth for Infosys this year. And Wipro didn't come out with their numbers, but just as a benchmark for the IT sentiment, Wipro ADR was down over 3%. And remember, IT has been an outperformer in the last 3 months, including yesterday's cut. The Nifty IT index is up 7.5%, outperforming the benchmark, which has gained over 2%. Other big earnings which are expected over the next 3 days. Today, you've got HDFC Life Insurance. Tomorrow, Avenue Supermart, Dalmia Bharat. And on Sunday, HDFC Bank, for the first time merged entity, will be reporting numbers. We also got the India CPI inflation print, and that was at a 3-month low of 5%. In terms of flows, we had the DII's net buy, 1,500 crore in the cash market. The FI's net sell, 1,862 crores. So the start will be lower. There will be some pressure courtesy the weakness in global markets and the IT stocks dragging the markets down. Back to you.
Okay, all right. So those are all the market cues. Of course, Reema said IT stocks will be under pressure, but Surbhi, list out the stocks that will be in focus. And of course, Infosys would top the list as well, followed by HCL Tech.
That's right. Infosys, the Q2 earnings were strong, as Reema said. Constant currency revenue growth at 2.3%. EBIT margins were up 40 basis points, but the company has surprised by cutting the upper end of the guidance. HCL Tech, the revenue was up 1.4%. EBIT margins came in at 18.4%, but again over there, the company has lowered the FY24 revenue guidance. Apart from the IT earnings, Angel One will be in focus. The revenues were up 30% sequentially, and PAT was up 38% sequentially. Anand Rathi Wealth revenue was up 4% sequentially. EBITDA was up nearly 6% sequentially. Kesoram, the revenues were up 13% on a year-on-year basis. EBITDA was up 35%. Margins came in at 7.3% versus 6% same time last year. Apart from that, Paytm will also be on our radar. RBI imposes a penalty of nearly 5 crores on the company for non-compliance with certain KYC provisions. And lastly, Dr. Reddy's, the US FDA issues 9 observations for the company's manufacturing facility in Hyderabad.
Okay, all right. Thank you so much, Surbhi. So a lot of stocks that are on our radar. Finally, Manglam is joining in with all the cues from the F&O space. Hey, Manglam.
Good morning. So yesterday for the first half, the market looked extremely good. Then we saw a little bit of a decline from the highs. Importantly, it was the Nifty IT stocks as well as the Nifty banks underperformance or inability to cross past that 44,600 mark that led to a bit of a decline from the highs. And now the GIFT Nifty is indicating a 150-point downtick, which means that we will close much, or rather we'll open much below the 20-day moving average of 19,750. And at the same time open closer to the 50-day moving average of 19,600. Infosys reaction, that will be important to test the texture of the market because the stock ended lower. A lot of shorts added in that stock. So will the street look at these numbers or will they look at the guidance cut is something that we'll be watching out for. There was an increase in FII selling in the cash market, so 1,863 odd crores. Though there was a mild purchase in index futures, no major change in their long exposure at 28% itself. However, we did see a lot of writing at the 19,800 call, so that's important. And at the same time, the 19,800 put, that will come into play in today's trading session because that has a premium of 90 odd rupees and the market opens just below that. So is there a question of them unwinding their positions at the open or not itself is something we'll be watching out for. The Nifty Bank, firm resistance at the 100-day moving average, 44,608. 50-day moving average comes shortly thereafter. A couple of stocks I would watch out for. Delta Corp is one of them. Exited F&O ban in yesterday's trading session, post numbers, did well, then from the highs saw a bit of a sell-off and is back in F&O ban, and a lot of short positions added on both Infosys and HCL Tech. The question is, how much of that is in the price, or will there be any short covering on these stocks?
Okay, all right. So that's all about the Power Prep segment. Thank you guys for joining us and telling us what to expect from our trading session today. Time for a break now. When we return, a double delight for the economy. Retail inflation in September eases while industrial output grows in August. Details on the other side. Welcome back. You're still tuned into Power Breakfast on CNBC TV 18. Well, let's talk about the big tech earnings announced last evening. Infosys and HCL Tech closed the second quarter with record high deal wins, while both companies lowered their revenue guidance for the current fiscal. Rima gets us a quick roundup of the highlights. Rima.
Thanks so much for that. As you can see on your screen, both the ADRs of Infosys and Wipro overnight in Wall Street trade were under pressure following the numbers. A quick recap, Infosys was a strong Q2. Beat on revenues, beat on margins, record high deal wins. For HCL Tech, mixed Q2. Revenue was a miss, but very strong margin expansion. And again, record high deal wins. The problem is their FY24 guidance has been lowered. Infosys is saying this year the company is going to grow at only 1 to 2.5%. And this is the second guidance cut by the company. Very unusual for a company like Infosys. For HCL Tech, the company's earlier guidance was 6 to 8%. Now they're saying in organic terms, which means X of any acquisition, the growth will be 4 to 5%. If you add the ASAP acquisition that they did, growth will be 5 to 6%. But there is going to be a decline in their growth expectations for the full year. The reason HCL Tech management said is because H1 growth has missed their own expectations. They're still expecting a very strong pickup in H2. In Q3 and Q4, if the company has to meet its full year revenue guidance, the lowered guidance, they still need to do about 3 to 4%. So the miss in guidance for HCL Tech, very important to note, is not because the second half is going to be weaker, it's because the first half has missed their expectations. Both the companies have maintained their margin estimates for the full year. A quick recap then of how the three companies stack up in terms of the key metrics. On the top line, Infosys was a big beat on their revenues. The only company which reported a beat in terms of a top line, 2.3% revenue growth. In terms of margins, all three companies reported an expansion in margins and higher than consensus expectation. And the highlight for the quarter has been those solid deal wins. For Infosys, HCL Tech, record high deal wins. For TCS, it's the second highest on record. And again, much higher than what we typically see.
Okay, all right. So that's all about the two IT majors that reported numbers last evening. Moving on to some macro cues now. A double delight for the economy. Retail inflation in September has eased to 5%, even as it is above the central bank's target this time, while food inflation has cooled off to 6.5%. On the other hand, industrial output has grown over 10% in August, surpassing estimates. Lata Mkts joins us now with the details.
Yes, it's an extremely satisfying number with food inflation coming in at 6.56%. Our poll was 6.8. Core inflation coming in at 4.5. Our poll threw up 4.7. So every which way, it's a positive surprise. But the headline is the best. The Reserve Bank's average for July, August, September at 6.4% gave the impression that the Reserve Bank was expecting only 5% for September. And that's how it has come. So it's an excellent news as far as policymakers are concerned. In the internals, the fall in vegetable inflation is the one that significantly contributed to the fall in overall food inflation. It's about a 2.2% fall. But the only number that I would worry about is pulses. Pulses alone are up 4% on the month, and year on year as well, pulses are up about 14%. So that will remain the sole point where the government will have to work harder in terms of bringing down food inflation. But otherwise, CPI ceases to be a very serious problem at this juncture, especially if it follows the Reserve Bank's forecast trajectory. The other positive news has come in on industrial growth. The poll threw up 9.5, but we have gotten 10.3, so that's clearly better than expected. Yes, we are working on a very bad base of minus 0.7 in August of 2022. But all said and done, it still means that the growth number is slightly better than expected. Among the best performance has come from capital goods, which has grown at 12.6% over a 4.3% last year, same month. So that's not a negative number. It's still 12.6, so it's done very well. Consumer durables at 9% is good because a year ago it was a negative number. Others, there isn't much to speak about. Electricity has done exceptionally well, but that again was because the base was 1% last year. All told, inflation lower than expected, growth higher than expected. It's a double delight for the economy.
Okay, thank you so much, Lata, for joining us and making sense of those numbers. Let's slip into another break. When we come back, we'll get you all the cues from the commodities markets as always. Stay tuned.
ये है इंडिया के
Welcome back. You're still tuned into Power Breakfast. Well, it's time to talk all about commodities. Manisha Gupta is joining us with the update as always. Hey, Manisha, good morning.
Morning, and thank you for that. Well, I'll start with the gold prices, where we have seen prices come off its two-week highs. We almost did $1,900 per ounce, but with the dollar index back above 106.5 right now, there is pressure that has been seen across metal space. For the crude oil varieties, it has been quite volatile. On one side, you have the U.S. production, which is now at a record high, and the inventory is gaining by 10.1 million barrels. The markets were anticipating less than a million, but you got 10 million, so that is what is weighing on. But on the other side, the U.S. is now imposing sanctions on tanker owners carrying Russian oil priced above the G7's price cap of $60 a barrel. Now, this is what seems to be supporting the markets and is the reason that you have seen in the Asian markets crude oil prices gain up by 0.25% to 0.5%.
Okay, all right. That's what's happening with crude oil prices. Thank you so much, Manisha, for that. And now the latest on the West Asia crisis. Ahead of a possible ground invasion of Gaza by Israel, US Secretary of State Anthony Blinken visited Tel Aviv yesterday and reaffirmed White House's support to crush Hamas. US Defense Secretary is due to land in Tel Aviv today. Meanwhile, Hamas has called for Friday protests in Jerusalem. Remember, over 1,500 Palestinians have lost their lives and at least 4 lakh displaced in Gaza. The death toll in Israel, too, has passed 1,200. NBC's News' Josh Lederman gets us the details from Tel Aviv.
The Israelis, for obvious reasons, are not announcing in advance exactly when they will start a ground operation. But I think the widespread assumption here, as you allude to, is that Israel would be very unlikely to begin that type of operation while one of the most senior U.S. officials is in the country, particularly a ground war that, by all accounts, is very likely to be very bloody, to inflict a large number of civilian casualties. And so you get the sense right now here in Israel that we're really in the calm before the storm. The Israeli government has not been shy about the fact that this is going to be a prolonged and significant military operation. Prime Minister Netanyahu saying the goal is to wipe Hamas off the face of the earth. That is going to mean significant military operations in a densely populated area where you have civilians living and existing in the same areas as many of these Hamas military targets. But we expect that when Secretary of Austin from the military of the United States is here within the next few hours and over the course of the next day, that a big part of that those meetings will be focused not only on what the U.S. can do to support Israel's national security with more U.S. military assets moving into the region, but also how they can contain this to an Israel-Hamas war in the Gaza Strip without bringing in other parties like Hezbollah, like potentially Iran and Israel's other enemies, which could really see this situation spiral into something much bigger.
Okay, and moving on now, the first charter flight under Operation Ajay carrying 212 Indian nationals has landed today morning at the Delhi airport. The repatriates were received by Union Minister Rajiv Chandrasekhar at the airport. According to reports, the second flight under the operation leaves today. Okay, we'll keep getting you more updates on this one. For now, we'll take your leave on this edition of Power Breakfast. Stay tuned. Bazaar Morning Call comes up next.